Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. The only important thing, well, you know what? I got a few important things to tell you tonight, but the most important thing is this. Touchdown, Giants win the Super Bowl, baby! Giants win the Super Bowl. You know what that means? That means we're having an update tomorrow. I think we are anyway. In fact, I have some charts to show you. And traders, you know me, I always try to show you what I think is happening tomorrow and not what happened yesterday. I'm about to do something that nobody in TV land would ever consider doing. Maybe you'll stone me at the end of the week, but I don't think so. I'm going to show you some charts right now, and one of those charts is an actual illustration of where this market will go and what it should do in the next 8 to 10 days. Let's go to the charts, traders, because there's some important things I want to show you there. So make sure you take a good look at this, and I'll be back to you in a few moments. Okay, traders, what we're looking at here is the March S&P Daily Bar, the SPH8 or the ESH8, depending upon which one you're looking at. The charts are the same. What we have had happen here is, it appears to me, we put in a left shoulder of an inverted head and shoulders. We dropped down and put the head in, and now illustrated with these red bars that do not exist yet, but I am showing you what I think will happen. I guess that's the best way I can put that. This is what likely will transpire next in the S&P. We're going to come up to this side. We're going to build a right shoulder. It's going to have a run out of that. It's going to test our apex up here at the top. And when it hits that, it's going to spend a day or two not knowing what to do. And then the next leg of the downside begins. And I think we'll end up lower than the previous low. An inverted head and shoulders is normally a bullish signal. But in a bear market, all it's going to do is entice people to get in up here. And I say we smack it right back down. Do not fall in love with the upside here. But I do expect that we're going to go up, a little sideways, down again, then up, turn over, and really turn this thing over to the downside. This market is not finished on the downside yet. Let me show you a weekly chart now, and I'll try to illustrate further. What you're looking at here now is the S&P March weekly bar chart, the March weekly. Of course, we had that upright head and shoulders here. The market tanked, went down, hit the 200-day moving average, started to rally back up. Just like the daily, we should come up, put in a little bit of a shoulder, and back down we go after testing some upside. I do think, though, there are a few days of upside coming. This is a stochastic oscillator. It is pointing north right now. The last time we were down here, look at the rally that ensued all the way up to here. Then we came off, came all the way back down to this same spot, and I expect that we'll get some sort of a rally. That is not my only reasoning, but one of the many indicators I choose to look at. Here you have the CCI, the Commodity Channel Index, also pointing north. And one of my favorite all-time indicators, the directional movement or average directional movement, the DMI or ADX, depending upon your platform. The green positive pointing up, the red negative pointing down. That is another buy indication. Traders, let's look for a little bit of upside. But again, I'll repeat, do not fall in love with the upside here. Let's go take a look at another chart now. Traders, this is the Dow Jones Cash, the daily bar cash in the Dow Jones. Again, one of my favorite indicators, giving us a wiggle towards the upside. You have the exact same formation as we have in the S&P. The possible shoulder head, most likely shoulder to build over here to the right. Again, I think that's nothing more than to, in plain English, to suck in some longs. When the longs get sucked in, we'll end up here somewhere, and then down we should go. The last time we had a head and shoulders projection was this one. We put this white line right here. I don't know if you can see it in the chart. That was our projection, and this was all low. You can't beat that, traders. That came right off the charts. That is pure technical analysis. These are the things I teach you here at the Emini Trading Academy. And if you'd like to learn more of how to read charts like this, simply come on down to my site. It's www.livewithoscar.com, and I will teach you how to do this for yourselves. Take a look at it, traders. This is the real deal. This is what happens in these markets, and this is how you read these. We look at what's happening going forward, not what's happened in the past. The past is great. Everybody knows what happened in the past. I knew the Giants won the Super Bowl, right? But I didn't know it until it happened, and you won't know what's going to happen until it happens. But if you trade with us, you'll learn to read these charts, and you'll get an ear for what might happen next. And I'll tell you right now, traders, technical analysis is a roadmap to where these markets are going. Let's look at another chart now. The Australian dollar looks really great here, and let me show you why. Okay, traders, the flavor of the last month and a half to 2 months has been head and shoulders formations. I don't know why they're appearing so often. I don't really care why. It's not mine to figure that out. It's mine to figure out what they mean and where we're going. We had a shoulder, head, shoulder, and a bit of a dump. And then it put in actually an inverted shoulder, head, shoulder, and had a bit of a rally, which turns into another inverted shoulder, head, and shoulders in the Australian dollar. And I tell you right now, traders, the Australian dollar goes up tomorrow. I would be shocked if it didn't. On top of that, the Australian government is about to raise, I said raise interest rates in Australia. And when you raise an interest rate, it makes the value of your currency go higher. Just like in our country, they're lowering interest rates and it makes our dollar go lower. So the Australian dollar has some fundamental reason why it should go up. And fundamentals always come out in the charts first. And here is your formation to show you that there's a fundamental coming out on Monday. Be careful with that, traders. Come on down to my site so I can give you the coordinates of where we're going to buy, sell, and take a loss if that happens in the Australian dollar. At the site, you will find the exact buy, sell, and stop levels. So come on down and don't trade alone, traders. Let me come back to you now. I hope this chart gives you a clue on what should happen in the Australian dollar tomorrow. Okay, traders, so you've seen the charts, right? How many traders are going to get in front of you and say, you see all these bars, the next 10 bars, this is where we're going to go next? I know that's a bit putting my neck out there on the line, but that's what I do every day for you traders. And anyone at my site knows I give my all, I give my best projections, and I do lots of hours of study before I come up with this nonsense. So make sure you do your study as well, because could I possibly be right about that? Well, maybe about as right as everyone out there watching, and it's only because I'm looking at charts, and that's what the charts are telling me. So do your homework, compare it to mine, and see if you see the S&P putting in that little consolidation now over to the right. Once we go up a little, consolidate, go up one more time, and then start the big downspin. I don't know for sure, but that's my take on things, traders. Don't forget, we're bullish Australian dollars, and we have a wheat trade out there at the site. We expect wheat to most likely do something tomorrow towards the upside. So again, if you come to my site, www.liveWithOscar.com, and grab yourselves a membership and jump into our chat rooms, I'll be more than happy to show you what those recommendations are. But for tomorrow, Green Omni, baby, we are looking for the upside, the S&P tomorrow. And this is what we plan on doing. The S&P is the ESH8 for the mini. Omni says to buy in the mid to low 1390s. Right now we're trading about 1395. We start to get a little pullback. I'm jumping in and getting myself long. Put your stop in a sensible place. For you Omniacs out there who are members of my site, you know where that stop is. Go to the site and look, but make sure you place your stops first. All right, so if we're going to buy the S&P, the ESH8, in the mid to low 1390s, we're going to place our stops so that we have protection and our emotions get out of this trade. We're going to look to take profits in the mid to high 1420s. We're looking for a pop here into the 1420s. On the way up, you should get some resistance around 1416. So if you get long in the 90s or under the 90s, somewhere down there, and your stop doesn't get tagged, the upside should ensue. We should get somewhere in the 1420s and maybe run into a little bit of turbulence around the 1416 area. That's my strategy for tomorrow. You traders know me. I stick to my guns. I stick with my strategy no matter what's going on out there. That's what I see. Do your homework. See if you see that for yourselves. Traders, do not fall in love with the upside here. I am not becoming a bull. I am saying that there's some sort of a rally that looks like it wants to take place based upon indicators and the charts themselves and some formations that I like to look at. But I am not going to fall in love with this. As it gets up there, I'm going to start finding that sweet spot to expect the downside again. So remember that. I remain bearish for now. I would turn bullish in a snap if the market's told me to, but they haven't told me that yet. So I am still a bear, trading a little bullish move in a bear market. All right, traders, I don't know what else I want to do in this video today because I'm really excited about tomorrow's trading. As I always tell you, don't trade alone. Never trade alone, traders. It is so difficult to sit in your rooms, typing in those orders, watching all the news come down. You don't know what's going to happen next. But if you come to our site and you join our ever-growing army of Omniacs, I assure you there's so much flow of information going back and forth there. We will be able to help you. If you like this video and you'd like to see, I don't know, 200 and... We got him again. That's 2 in a row. He doesn't know how many we have. I think we're about 268 right now, somewhere right in that zone. Maybe 269. We have about 269 videos like this one with more techniques than this to show you, for you to learn from. So further your education by going to our YouTube spot. It's www.youtube.com/futuresanalysts. When you get there, subscribe to the video so YouTube will let you know whenever we put another video out. And do your homework. Watch those videos. Try to catch up. And then come on down to the site and join us. And let us continue with your education. The Omni Trading Academy is a great place to learn how to be a good technical analyst, traders. So come on down and make sure you join our crowd. If you'd like to send me some charts, a lot of traders do their homework. They draw up a chart and they type a little blurb on that chart about what they think that chart means. Send me that homework. I'll review it and I'll shoot you back a message on whether you've done the analysis correctly or whether or not the Omni Trading Academy agrees with your analysis. Shoot those emails to No, what am I saying? So I don't know where to shoot those emails. I'm lost here.
Oscar at Futures Analyst.
Thank you very much. Send those emails to Oscar at futuresanalyst.com. I will get that email and shoot it right back to you. There's also a spot on my homepage for feedback, right? That's still there.
Yes,
if you hit the feedback button, you can shoot me an email
Email
there.
Oscar.
Email Oscar.
Email Oscar is the button on my homepage on the left side. If you hit that, you can send the chart right there or anything else you'd like to talk to me about, and I'll get those emails. Traders, we are here to help you bridge the gap from the days of old when you called those experts down on the trading floor and they were there to help you. Well, those days are drying up rapidly, and this is all done electronically. There are hordes of people around this earth that jump in the markets every day. So the guys on the floor, some of them are a little too close to their market, too close to the action to really give you the goods, being that they're not getting the bulk of the trading anymore. The bulk of the trading is on the electronic platforms. So we are here to help you bridge that gap from those days, the days of old, to the days of today when you're typing that stuff and hitting enter and getting right in the markets. Don't be afraid, traders. We are here to help you, so come on down. I would like to give you my phone number here. If you want to give me a call, we are here day and night to answer your phone calls. The number is 702-629-4755. Gentlemen, am I missing anything?
I think you covered it as far as I know.
We're all good? All right, we're all good. Traders, don't forget to keep your emotions out of this thing, and one of the best ways I can teach you to do that is to give you a mantra. We say this every day. We say it every morning, every evening. We say it while we're brushing our teeth. We say it when we're placing orders. I say it in my sleep, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.